Good evening and welcome to the regular meeting of the Board of Finance, February 17th, 2026. Thank you to Simsbury Community Media for filming. Mark in particular, hello, thank you. Please rise for the Pledge of Allegiance. I pledge
allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Because tonight we do have transfers and supplemental appropriations, we have public audience, which we always do when we do an amendment to the budget. Is there anyone who'd like to speak? Joan, please come up. If you could just state your address for our clerk.
Joan Cole, 26 Wickham Drive. The grand list has only increased 0.08%. Without an increase in the grand list, the budget should have no increase in spending to make Simsbury economically competitive. All increases in the budget affect all the taxpayers with an increase in the cost of living. Many managers of apartments are incentivizing people with months of free rent, while many apartments remain vacant. With an increased supply of apartments and reduced demand, there will be a readjustment in the value of the property, leading to lower assessments. The town should not be incentivizing companies with abatements and exemptions when they are very successful businesses. Ensign Bickford is receiving a tax reduction for 10 years of $45,129. Solatran is receiving $56,031 tax reduction for 10 years. Solatran is a $14.4 billion corporation, and Ensign Bickford is an extremely viable business. The high rollers are incentivized with reduced taxes, while the Simsbury taxpayers continue to have increased taxes. Horses have been given a municipal exemption, leaving $20,000 reduction in revenue. The International Skating Center in Simsbury should be paying $280,000 on the original building and more on the addition. To date, they are paying $90,000 to the town with a purchase of an office building, purchase of land for a hotel, while the town considers them in need of reduction in taxes, needing to be incentivized. The developer of the Ensign Bickford house renovations was incentivized with an abatement while they are purchasing additional properties in town. The town is incentivizing the Simsbury Volunteer Ambulance Association, SBAA, with $200,000, while Avon uses AMR with no cost to the taxpayers. In addition, they are asking for $250,000 to cover a new ambulance that they already purchased. SBAA can capture revenues. The town should not be incentivizing a failed business plan. Lisa Havner has researched the value of abatements to industry and concluded that abatements are not necessary tool to retain businesses. The town gives the high rollers exemption abatements, while the taxpayers are the fools who paid to cover their greed. Policy that requires all abatements and exemptions given to businesses an equal amount should be reduced in the expenditures in the budget. Town attorney Bob DiCrescenzo receives approximately $10,000 a month for service. While he is receiving his payment, he contracts with other businesses that are doing business with the town. Silverman Group and Ethel Walker are some of DiCrescenzo's clients. This creates conflicts, causing the town to pay an outside attorney at market rates. At the present time, the taxpayer is required to pay the outside attorney fees for a conflict with the Silverman Group, while DiCrescenzo gets his full fees. When a business is developing a project that requires outside services, the developer pays the fee. Why should the taxpayers pay for town attorney DiCrescenzo's conflicts? Non-public schools show an expenditure Culture Recreation Commission 24-25 budget of $257,682. This amount of cutting grass and maintaining the turf at the schools should be placed in the school budget. New path designation will be used for all revenues and expenditures on Two Farms Village Road building and should be reviewed regularly. As the gatekeeper of the budgets, increasing taxes is unacceptable. All of my comments will be posted on Simsbury Patch and Twitter at Jonco. Thank you for listening.
Thanks, Joan. Is there anyone else who wants to speak for public audience? Okay. With that, we will start with the audit, which is always the most exciting presentation of the year. So if you introduce yourself to the public, although we met in the fall.
Thank you for that introduction. My name is David Flint from Clifton Larson Allen. We are the town's auditors, independent CPA firm. The 2025 audit was handled by my counterpart Vanessa Rosito. She retired as of December 31st, 2025, and I will be taking over the Simsbury audit going forward. So just an agenda for today. I'm going to go over the terms of the engagement. An executive summary, some financial highlights for you, go over the federal and the state single audit, the governance communication letter, the management letter, and then of course for 2026 we have a new GASB pronouncement. So the terms of the engagement, basically what did you hire us to do? We expressed an opinion on whether the basic financial statements are presented in accordance with GAAP. We also expressed it in relation to opinion on the schedule of expenditures of federal awards as well as the schedule of expenditures of state financial assistance. We also expressed an opinion on compliance related to the major federal awards as well as the major state programs. We provide a report on internal control over financial reporting in compliance with laws, regulations, contracts, and grants. This is more commonly referred to as the Yellow Book letter. And then finally, we provide a report on internal control over compliance related to major federal programs as well as major state programs.
Quick question, do you have the ability to put that on the screen for the public?
I do not at the moment. I apologize.
Can you email that to Mike Doyle because he is obviously online?
I absolutely can.
Okay.
I'll email it to you. So an executive summary for today, financial statements, there was an unmodified opinion on the basic financial statements. Unmodified opinion, of course, is the best opinion that can be given. For the federal single audit, unmodified opinion on the major federal programs, no compliance findings or significant deficiencies in internal control over compliance.
So just for the public, that's really good news.
Great.
Congratulations to staff.
Same results for the state single audit. This is what we consider to be a clean audit. This is the best results that can be given across all three audits that we perform. So turn to the page to some financial highlights. These are the governmental activities and these are performed on the full accrual basis of accounting. And what that means is they include your long-term assets and your long-term debt. So you see at the top of the balance sheet here, we have capital assets, net of accumulated depreciation of $194 million. We also bring on our non-current liabilities below of $79.3 million. And all that brings us down to a total net position of $164.3 million. The majority of that is your net investment in capital assets, which is your total capital assets, less any debt that's outstanding to acquire those capital assets. So of the $194.5 million in capital assets, $138 million is free and clear of any debt, which is great. We do have a restricted net position of $6.7 million. The majority of that is grant receivables that are for a specific cause, as well as your net OPEB asset. The value of that is in there. And then the remainder is your unrestricted, which is $19.4 million. Turning the page, these are your fund financial statements. These are probably more important when it comes to looking at. Correct.
Okay.
They net to zero. Good question.
Just going forward, could you do that in a separate line so that it's obvious, because that way we can compare it to the budget? Because otherwise when somebody looks at the budget, they think,
Yeah, I would refer to you to there's a schedule.
I know it's for later and yes.
There's a budget to actual schedule where it just has the amounts that you budgeted, where you can see how you did against budget, and those items are shown separately.
Okay.
I think Lisa's probably asking for that for members of the public who aren't gonna get to page whichever that was.
Understood.
And who are gonna see this, because it'll be in our minutes.
Thank you.
We could certainly, I could certainly add more detail.
Okay, thank you.
So some financial highlights. So like I said, fund balance for your general fund, $21.8 million. You have $356,000 of non-spendable fund balance. That's just prepaid items. You have $860K of committed, that's your Board of Ed non-lapsing fund. You have $21,000 assigned. Those are just encumbrances from 2025 that are rolling forward into 2026. And then finally, you have unassigned of $20.6 million, which is approximately 16% of your 2026 budget. So looking at the general fund budget, general fund revenues were about $2 million above budget. Property tax collections were $863,000 above budget. Investment income was $770,000 above budget, and building department fees were $526,000 above budget. You also have your health and dental insurance fund. Ending net position for that fund was $5.4 million, which actually saw an increase of the year of $627,000. It's really nice to see a surplus in this fund, as these funds across the state have been taking a beating the last couple of years.
Is that our internal service fund?
Correct. So the next page is your pension and OPEB funds. So you see you have your 3 pension plans here, and then of course your OPEB plan is the 4th column. You'll see each plan had a nice change in net position of the year for the year, increasing your ending net position across all 4 plans. And that was due to very strong market.
Page 10, Tyler.
That was due to very strong market results for fiscal year 2025. So on the next page, you're looking a little deeper into those plans. So the total net pension liability for all 3 plans together was $27.5 million, and that was a decrease of $3.5 million from the prior year. The general government plan had a liability of $11.4 million, and that plan is 73.4% funded. The police plan liability was $5.6 million. That plan is 80.7% funded. The Board of Ed plan is $10.5 million, and that's 74.8% funded. It's important to note that 100% of what you're actuarially calculated to put into these plans was put in by the town.
So the net pension liability decrease, what is the driver behind that?
The biggest driver for fiscal year 25 is you'll see it in this 5th bullet point here, is you had a 10.85% return on your investments.
Oh, right. So it really wasn't because the liability decreases, the net liability
The
decreases.
net, exactly. The value of your investments increased.
So we budget for a 6.5 investment and we hit 10.8. But that gets smoothed over 5 years, so you don't take it all in 1 year.
And then of course you have your OPEB plan. This plan actually had a $1.3 million asset. It's actually 105% funded, which is great. I would say the majority of towns don't even have a trust or investments set aside anymore for their OPEB plan. So to have a plan that's 100% funded is really great.
Just for your information, starting next year, we'll begin using the trust. We haven't been using it. We still doing it.
You've been paying as you go.
Yeah, but we met with our actuary and we're gonna begin to use it starting next year.
That's great. You put an additional $322,000 into that plan over what the actuary calculated. And that plan received an 11.7% investment return in fiscal year 25.
Amy, can you talk about why we did that? I think it's when we got the estimate from the actuary to when we found out now.
No, so the actuarial estimates is a 0, but the employees contribute a portion of the OPEB. So those are the employee contributions that are going in.
So, in addition to the financial statement audit, we're of course doing the federal single audit. This is the audit of all the federal grants that the town receives. Total federal grants expended was $2.6 million. This was down from $6.4 million in 2024. This is primarily all due to the ARPA funds being spent, the majority of them in fiscal year 2024. So that was $4.1 million spent in 24 versus only $250,000 approximately in 25. That's consistent with what we're seeing everywhere as those programs dry up. We had one major program that we had to audit, the special education cluster, more commonly referred to as IDEA or IDEA. Like I said earlier, unmodified opinion in major program compliance and no findings on internal control over compliance for those programs. State single audit, total state awards expended were $17.4 million, down slightly from $21.9 million. The reasons for that was the lot SIP grant, which was down $1.4 million, And then, of course, the motor vehicle tax grant, $1.5 million. The major program that we audited in the state was the Open Choice Grant Program for fiscal year 25. And again, unmodified opinion and no findings on internal control or compliance. So as your auditors, we are required to communicate with the Board of Finance twice, at the beginning and at the end of the audit. Of course, the communication lines can always be open anytime you guys feel fit or anytime that we find something that we can audit. So in fiscal year 25, we did adapt two new accounting standards, GASB 101, which was a slight change in how compensated absences was accrued. And the GASB 102, which was certain risk disclosures which did not have any impact on the town of Simsbury. There were some significant estimates within this financial statement that I need to bring aware to you, make aware to you guys. Those significant estimates include the net pension liability and the net OPEB liability. Of course, there are a lot of actuarial assumptions that go into calculating that. The fair value of certain investments, as well as the IBNR, the liability in your internal service fund.
Two things there. We will be doing an experience study next December. We'll be authorizing that, so have a
Great.
little bit clarity on some of those assumptions. On the compensated absences, I did have a question. Are you seeing towns creating trust funds for them? I know New York is recommending that they do that. Newington has one. And her liability is 1.7, I saw, right?
Yeah.
1.2. Should we be how are towns budgeting for that or saving for it?
That's a great question. I have not seen, you said Newington's doing it? I have not seen any towns set one up yet.
500
So
in
whether
New
there's a
York.
liability, it's not typically paid out, like the value of the liability.
Yeah, so with the change, we're also accruing for time that we're expected to be taken, not necessarily time that's gonna be paid out. So that did increase the amount with this new standard. So it's not necessarily all cash flow. And it's cash flow that's spread out. Do you know what your yearly comp abs pay out?
Not off the top of my head.
I can't imagine it's very significant to the point where you would need
Okay.
a trust fund.
Could we get that number when you get a chance?
Sure.
I could see in a large city where that yearly amount could be significant, where a trust would make sense.
I think it's probably less than 15,000 because that's what we budgeted.
Yeah, so
I have a question, where has this been noted in the audit, in any of the footnotes, the new standards adopted?
So we only note it if it's a material change, like a big change. For
Okay.
you guys, it's not noted.
And so why, what would the threshold be for it to be material?
So we calculate materiality levels for all these different what are called opinion units. So the governmental activities has one, each fund itself has one. Those are not something that we would share.
Okay,
You would not want the town employees to know what the materiality level is.
thank you. So it's not in the footnotes, correct? So it won't be, it's
The
not noted?
compensated they're in,
But no, it would be right in your long-term debt,
yeah.
Okay.
right in your
Page
long-term debt.
19 and 22, I think, right? I wrote it down somewhere.
Yeah,
It's gonna be
I
farther
missed
than
it,
that.
so I may have missed it.
One sec, I'll point you to the right page.
Yeah, I have it on 19 and 22. Maybe elsewhere too. On page
So it'd be on page 49.
And it's also on 19, it shows it too, on 22.
Oh, in the
Yeah.
managers at the end.
But the one you want us to look at is 49?
That's just your schedule of all your long-term debt. So your compensated absence liability, like you said, $1.7.
Okay, got it, thank you. I did see it, but I couldn't remember, thank you.
Continuing on that auditor's communication, we had no disagreements with management. Management did not consult with other accountants. We had no difficulties encountered in performing the audit. Is that in there from last year? That must be in there from last year. My apologies. There were no uncorrected misstatements in fiscal year 25. That's in there from fiscal year 24. And we did not have any independence issues. We had nothing new in the management advisory letter, but the comment from fiscal year '24 for capital asset reporting still exists. That should say expected implementation for fiscal year '26 regarding the Munis capital asset module and getting all the town's fixed assets into that module.
We have two new members on board. Can you explain the basis of that?
Yeah, so you guys use Tyler Technologies, what?
We use Excel right now.
Oh, currently, yeah, but you guys use Tyler Technologies Munis, which is probably the premier accounting system for state and local government. And included in that is a fixed asset module to track and depreciate all the town's fixed assets. Currently, you're not using that module, you're just tracking it in Excel.
Oh,
Just eliminates calculation errors and proper reporting going forward.
so what would you prefer to use, Munis?
I would prefer to use Munis. We've been going back and forth with Munis. We were actually talking about it before the meeting. They actually have somebody in-house that can build it for us instead of us going back and forth with Munis, because we have like the fraud risk assessment, we have the FMLA, which we'll talk about later. And so they're actually willing to do that data entry for us. So we're gonna talk offline after and see if we can get that cleaned up.
Okay.
It is a little bit of a heavy lift to get it set up initially, but once it's set up, it makes the process easier. You can flag the transactions as they occur, bring them right into the module. It will make the process and the year-end close regarding capital assets a little bit less strenuous, because nobody likes capital assets.
And I just had one question about continuing education. Our finance director has indicated that's not actually part of the town, and she's not the treasurer for it. So how do you audit that, and why is that in our audit?
What are you referring to?
Continuing ed on the Board of Ed side, you said they have a different EIN.
DCE on the Board of Ed side. It's our Department of Continuing Ed and our SEED program. I think it's part of the BOE program funds. They are a entity. You probably would have looked at it as part of a component union type situation.
Yep.
Likely you're gonna have to dig in your files to answer that question.
Yeah. I'm not familiar with the situation. I'd be happy to look into it and we can have a discussion about it.
I just, if it's not part of the town, we shouldn't be paying for it. If it is part of the town, we should be monitoring it, so.
Yeah, there's a pretty strict checklist, if you will, on what should be included and what should not be included, and I'm pretty certain that that's been filled out. I just would like to take a look at it before.
Just some clarity on it, who's the treasurer if it's not our finance director, stuff like that.
Do we know if it's a separate 501c3 that operates on its own?
How is it organized?
So we've
That's
been
only
we've been looking at the supporting documentation as of recently for insurance purposes. There was questions that came up related to workers' comp and things like that. We can't determine right now, nobody can seem to find what it was set up as. We know it has a separate EIN number, but we don't know what it's flagged as. Is it an education organization? Is it a 501c3? I think it's an education organization, and I'm pretty sure it is under the under the umbrella of the Simsbury Board of Education. But we're still digging.
Okay.
When do we
I'd
think?
love to find the answer to that question.
Me too.
Yeah, I know.
I'll keep you posted.
It's like this mystery that needs to be solved now.
About how long do you think it will take to investigate that, Amy?
They've been looking at it for like a few weeks now. We just got documentation over to Kerma, so Melissa's on it. I'll see if I can get an update.
Thank you. If we could get an update, it's the 6-month point, just see where we are.
Yeah.
Just the adult ed.
I'm glad it's not slowing them down, I suppose. I like the continuing education programs.
Yeah, but if they are part of it, maybe we wanna see that budget.
Awesome.
Yeah, we can talk about it. So looking ahead to fiscal year '26, one relatively minor statement, especially compared to GASB 101, that we have to implement this coming year, it's GASB 103. It's just small changes to the financial reporting model, so there will be small changes to this. Amy will have to put a greater level of detail in the management discussion and analysis. And then that budget to actual schedule for the general fund we were talking about, we're gonna have to add a variance column for the beginning budget and the ending budget.
I
We're
thought
also
we
gonna-
had that, don't we?
And we're gonna, do you guys have it? It's not required.
We have something. in
You
there.
have a variance from final budget to actual.
Yes.
But now we're gonna have a variance from beginning budget to final budget, so it shows more clearly how the budget changed over the course of the year.
Can you just go to page 88 and just tell me what you mean by that?
Yep. So see how we have budget amounts, original, final? So it's gonna be original, final, variance,
I'm on page 87,
original, final, variance, and then you're gonna have your actual, and then you're gonna have a variance again.
And the variance from what will the second variance be?
The second one will be the actual compared to the final budget. The first one will be original budget to final budget.
So two variances.
Yep.
Cool.
So you guys do the year-end budget transfer, so you,
See that, yeah.
so you just show zeros.
Okay, that's great. Actually, that's Wendy Maxudis has asked for that for years, so that's
What have I asked
perfect. The difference between actuals and.
I just said that to Mark. I read my own sometimes.
You do.
So I don't expect that to be a very heavy lift for fiscal year 26. Then of course my contact information. Do you guys have any questions?
We do have Mike Doyle on the phone. I forgot to mention that for members of the public, but his name's right up there if you can't see it. First of all, thank you for that. I thought Amy's management statement was very good. Amy, what are you going to be adding to it next year? I
Whatever
already
they
think
tell
it's
me
good.
to. I think there's one community on my GFOA board that already did it for this year. They did a implementation beforehand and it's a lot more detail, so I'm probably gonna model where is she? She's out of Manchester.
We
I'll
have a
probably be
cheat
modeling
sheet.
that one. Oh, you do?
We have a cheat sheet.
So
So
they'll tell me what to put
yeah,
in
we'll
it.
tell you exactly.
What
what
are,
you need to
from
do.
your perspective, then what are the major changes?
I honestly haven't even looked into the standard yet. We're still trying to wrap up our
Alright then.
2025 audits.
Alright, and so when you start next year, I think I already mentioned where you heard we'll be implementing the trust, so that's something to watch when you do the next audit.
Yep.
And continuing ed, we'll get more information on that. Those were the
Yes.
two open things. Is there
Yeah,
anything
we'll have a
else from
discussion on that.
members?
No.
Okay, thank you, we appreciate
Thank
you.
you guys so much.
Alright, thank you.
Have a great night.
Hi, David. Did Amy get the budget award? GFOA?
The budget award would not
I
be
mean-
for this, it would be
I mean, for this award.
yes, yeah, it's in there.
So that's on, that would be what, let's say, page Roman numeral 6.
Just for members of the public, this is the what year we've received this?
For fiscal year 24, you received GFO's reporting excellence reward, GFOA's.
It's like,
Just doing this for
yeah.
Simsbury Community Media. We're very proud of that. Congratulations, Amy.
No, it's a big deal. Great job, Amy.
Well done.
Alright, have a great night, everybody.
Thank you.
Thank you.
Nice work. Great job.
And now that he is gone, we will move on to the most exciting presentation of the year. Oh, welcome fiducian. We do have with us Tyler Anderson and Kate, I've forgotten your name. Kate Peasy is filling in for Chris tonight. So we'll let you guys begin.
If you guys wanna come up here and you can control the presentation if you want.
And just for members of the public, the Board of Finance has, Lalitha and I have seen this presentation.
Sure.
We do have Mike Doyle on the phone and we've got Regina. All of us have received this in advance and read through it. So we have a pretty good understanding of the details there, so we'd ask you to go through sort of high level.
Just let me know what page you want.
Okay, thanks.
Thank you, Madam Chair, for asking that.
All right, well, good to be here. I will do my best Chris Kashmar impression. But my name is Kate Peasy and I work on a lot of our pension clients, both communities within Connecticut and also outside of the state as well. So glad to be here and will certainly pass along any feedback to Chris from the meeting. So I'll just touch on a couple of areas rather quickly, but happy to dig in more deeply if you have any questions. First is really talking a little bit about markets, what's going on in markets, and how that impacts our outlook going forward. Secondly, how that then impacts our expectations for some of the returns within the pension plans and the OPEB plan. And then finally, kind of backing up a bit and just talking about how the pension plans have performed in 2025 to report on that. So we had a little bit of an insight into that through some of the actuarial comments on the returns, but I'll show you a little bit more detail. Okay, driving. Okay, perfect. All right, so just quickly, and I'm gonna jump, I'm not gonna go through every page, but again, please stop me if there's anything you want me to dig into a little bit more deeply. As far as market themes and what we've seen this year, 2025 was the first year in quite a while, really since 2009, where we saw international stocks significantly outperform US stocks. And that was really around the backdrop of a lot of the uncertainty around tariffs and weakening dollar really sent investors to seek returns outside the US. However, it was really robust or strong markets across the board, both in bonds as well as in stocks. Give you some numbers behind that. International stocks were up over 30% this year. US stocks were up about 17% this year, and bonds were up about 7%. So really strong returns kind of across the board. But this puts us in a bit of a conundrum as we think about where we are today and what that means going forward. And we're seeing some of that already in markets and some of the uncertainty to kick off 2026. One of the big questions is really around AI, and that's on the upper right-hand side of this page here. And we often get a lot of questions of, are we invested in artificial intelligence? Do we have that in our portfolio? And the bars here show some of the major indices within the investment arena and the direct exposure to AI. And you can see that first dark bar, the S&P 500, which is US markets for large companies. Almost 40% of US large companies or the market has exposure to AI already. So even just by nature of being invested, you have significant exposure to AI. That's actually one of the risks we see in going forward, and one of our kind of key themes in 2026 and beyond is really making sure that our AI playbook is both defensive and offensive. Offensive being that we do want exposure to quite a transformative area of the markets, but we want to temper some of that exposure because of the concentration risk and that potential risk for a pullback by some of the really largest exposures in the market. Fast forward, so that was our outlook at the end of 2025. And again, we're already seeing that play out in markets today. Positioning from a portfolio perspective is really underweighting some of those largest companies within the US and overweighting some smaller companies. So leaning into higher quality, smaller caps and mid caps within the portfolio, and you see that exposure. That was actually one of the risks coming into 2025 that we saw from a concentration risk. I'd say it's just kind of grown into more of an AI risk more directly this year. So having that underweight to large companies this year was a bit of a headwind for the overall performance. Although, again, from an absolute perspective, very strong returns overall.
Kate, when you think about international concentration, do they have similar levels of AI as part of their portfolio or
no?
And why is that?
Well, and it's just because some of the largest companies that we're seeing are US domiciled companies. So you think of kind of that Magnificent Seven, they're all US companies. So that's really driving a lot of the growth. That's not to say there is not exposure, especially in the Chinese markets, et cetera, but it's not the level of concentration that we're seeing in the US. Which is also why we do like having international exposure, not just because geographically diversified, but as diversification in the types of companies too that are outside the US. So that AI piece is one of those themes. On the next slide, two other themes as we think about going into 2026 and beyond. Sorry, it's a little hard to see, but navigating valuations. So within markets, you might hear a term valuation. That's really the measure of the expensiveness of a stock. And right now valuations are very, very high. So when those little sliders on that page are representing kind of the percentiles of the last 20 years of valuations or the expensiveness across areas of the markets, looking at various measures of valuation or expensiveness. The dots represent where we stand today for various areas of the markets. And so most of those dots you'll see are at the top end of those ranges there, representing we're really in expensive markets today. So we've seen double-digit returns in US equities, particularly over the last 3 years. And so that's put us in a position where things are expensive. Where we're seeing some opportunities for less expensive are those blue dots you see there, and that represents small companies, so small cap stocks. So again, another reason not only to diversify away from AI, but also to kind of take advantage of better valuations within small cap stocks.
Now, is I'm going to say overvaluation, but that's not what I mean.
Yeah.
Does that imply overvaluation, or does that imply there are few companies that are dominating it in rising tide situation?
Yeah. So, I mean, there are a handful of companies that are dominating the expensiveness in markets. And that really has to do with the AI trade that we've been seeing. So that's really where a lot of the expensiveness in markets are playing out in these numbers today. And again, why we're seeing what we're seeing in markets in 2026, where we see a lot of the AI companies pulling back significantly and a lot of those smaller companies doing well. So far in 2026, just to give you a kind of a real-time example, year to date, US large companies are about flat, up about 0.2% year to date. Small companies are up almost 8% year to date. So again, as investors say, okay, you know what, this may not quite be a bubble, but it doesn't feel great, right? It feels very expensive. Let's find other areas of the market to go.
Thank you.
Sure. And then thirdly, we're calling it noise resistance. It's the graph is showing low quality bonds and their continued drive higher in their valuations, which kind of seems counterintuitive given some of the concerns, I'll say economically, from a jobs perspective, from a tariff perspective, and even amid all of that uncertainty, we still see investors kind of comfortable with taking on risk in their portfolio. So markets seem to be rather resistant to a lot of the, say, economic noise we've been seeing. Just recently, though, that being said, we've had actually some good job numbers recently or better than expected job numbers come out, some improvement in inflation. So it still seems to be doing relatively well, despite some of the headlines of some mass layoffs.
So can I ask you a question? How do you verify the accuracy of the data? Obviously, we're hearing. How do you weigh that, and whose data do you look at when you make that conclusion?
Yeah, well, it's been particularly tough, right, with the government shutdown in the last quarter, and really us not having any data to take action on. It's been particularly tough. I mean, we are not economists. We kind of have to lean on the data that the government is rolling out, but that's been a hot debate of whether or not that data is actually as, I'll say, viable or dependable as I think investors kind of blindly take. At this point, it's kind of the best that we've got, and try to keep tabs on kind of what we're hearing in markets and then what we're receiving from the data.
Are you hearing? Is what you're hearing symmetric with what you're seeing with the data that you're receiving?
I would say it's largely consistent, but I think it's because there is really so much uncertainty out there. So when I say consistent, I say that maybe with a big caveat around it, and it's just that I think really there's a lot of uncertainty of which way we're going, that people or investors are kind of waiting with bated breath, I'll say, on kind of hard data coming out that they can depend on.
Okay.
So those are our three key themes. So around AI, around the navigating those expensive valuations, and then recognizing that we seem to be in a bit of a noise-resistant economy right now. What that means for portfolios, if you just jump a couple of slides, I'm gonna just go over to our, sorry, I'm gonna jump around on you, page 12. What that means for our portfolios is as we think about our returns going forward versus kind of at where we were at this point last year, we are expecting lower returns going forward than basically we were expecting where we were last year. So again, another year of really significantly strong returns, really we think is brought the expectations down a bit.
When you compare 25 to 24 and what your expectations were, of course 24 was a different world.
Yeah.
Did you expect volatility, and did that actually happen?
So we did expect, if we were sitting here last year, we were expecting a lot more volatility and really looking towards diversifiers within the portfolio, like the diversified real asset exposure that you have, in order to kind of help drive some returns that are outside of your kind of standard stocks and bonds. I'd say we're not that much different this year on expecting volatility. The reasons are a little bit different.
Okay.
But the outcome, I'd say, is pretty consistent. We've taken down our expectations around fixed income and around US equities kind of across the board. Where we've actually slightly increased is actually in international. So although we saw international do extremely well, we still think that kind of compared to historical levels, there's still some opportunities there in international.
Okay. Now, when you say international, what does that typically mean? Is that primarily weighted towards China? Is that what it looks like?
So it's a really good question and a very loaded question, in that it's funny because there are some management funds that view international as where revenue is generated. Mm-hmm. But generally it's going to be where that company is domiciled. And when I speak of international, it's basically everything outside the US. So that includes developed markets. So think of Europe, and also includes emerging markets. China is a big portion of the emerging market index, even though it's like the second largest economy in the US. From a per capita perspective, it still is in the developing markets, not the developed markets. But it includes it all. Basically everything outside the US.
Thank you.
Yeah, sure. So that's kind of the impact that our outlook has on future returns. When we reflect that into the portfolios for the pension plan, I won't turn to the page, but it's in the deck. Our expected return for future earnings in the pension plan is 7.1% based on these capital market assumptions going forward. Slightly less than the year before. Year before we were about 7.2%. I will say still above your expected return number that you're using to discount your liabilities of 6.5%. So any actual return garnered in excess helps close kind of the funding deficit over time, which is our goal. On the OPEB plan, similar output as far as our expected returns, but that plan has a slightly higher allocation to fixed income. Those expected returns are about 7%. So right in line there. So if any questions on our outlook and how that has impacted kind of our go forward expectations?
Well, I guess the one future thing is interest investment assumption. If you could just speak to that.
Sure. So at the start of the year, that's kind of when we strike our capital market assumptions. Our expectation for cash or kind of income generation was about 3.25%. The expectation, and that generally is connected to the Federal Reserve, the U.S. Federal Reserve's action around monetary policy. And we really look towards the futures markets to help set those expectations. Markets are expecting by the end of the year that to be around 3%. So we think between 3 and 3.25% is a very viable assumption for that income.
So we're currently at 3.75 so we'll drop it down about 0.5%. Amy, where are
We've
you,
already done it.
where are you at?
325. Yeah, that's the same guidance that Chris had provided.
Glastonbury is using that as well. Okay.
Great. And then quickly, if I can just flip back to, I know we've talked about what happened going forward, but I just want to report what has happened in the past. And that was really 2025. So if you just jump to, I'm sorry, I have the page right in front of me here, the 114, sorry about that. You'll see the one page kind of snapshot though. I'll speak to it because you're gonna have a really tough time seeing it on the screen here. Performance page. So for the year 2025, not the fiscal year, this is the calendar year. The portfolio returned 14%. So again, well in excess of that 6.5% return, helping to close that gap over time. Though falling a bit short of the blended benchmark because of some of those positionings that I had mentioned coming into this year that we're maintaining, that underweight to large cap, and some of the more, I'll say, quality bias with some of the managers. If you look longer term, over the last 10 years, the pensions have returned 7.4% on average each year over the last 10 years. So again, kind of well in excess of the actuarial assumption, which is certainly the goal of the asset allocation work that we do. I do want to make you aware there is one fund that is not on maintain, it is on watch. It is a real estate fund. Barings Core Property Fund was placed on watch in the second quarter of 2025. We will be coming back to you after this next quarter, likely with our recommendation. The recommendation would be either to bring it back to maintain or to take action on it, potentially remove it or look for other options there. There were some changes within the portfolio management team that we felt were significant enough to place it onto watch. Just as a reminder, we try to make sure we don't spend any more than 4 quarters with any fund on watch. So, by that time, we feel like we have enough time to take action.
So is your concern about the team that's managing it versus the underlying
Investments?
Yeah.
Yes, yeah, and actually their performance has been quite well. But the team, there's 2 co-portfolio managers that are driving all the investment decisions. One of the portfolio managers left the firm last June,
okay.
and they decided not to replace her and to move forward without having only one portfolio manager. That's a meaningful change, and she had been around for quite a while, and so we felt it was worthwhile to elevate that to watch rather than.
Is this the person who retired and they just didn't replace them?
No, she actually left the firm.
Okay.
Yeah, and then there were some other kind of seat changings around within Barings, not that they were on the strategy, but again, kind of elevated it to a broader concern for us.
Thank you.
Sure. And then on the OPEB plan, just to round that performance discussion out, on page 17, on the calendar year, up 16.3%. Again, a little bit less fixed income here, a little bit less bonds, so heavier stocks that helped drive some of the returns in this year where stocks really outperformed. And then over the last 10 years, up on average 8% per year over the last 10 years. Any questions for me?
No.
Okay.
One question we have, maybe it's for Mark and Amy or for council, is and I know Charter is looking into it. The Board of Ed has some defined contribution plans that we do not manage and supervise, and the question is, are we obligated to do that by the charter or not? And maybe we need council's input on that.
I don't think it'd be
Any-
included in the charter, it's not including the IPS.
Pardon?
It's not including the IPS. I don't know if it's in the charter, but you're very similar to a lot of the other municipalities. It's more, the 403B in a multi-vendor facet is held under a different standard. Now, it doesn't mean that, it shouldn't be, but it's not ERISA.
I don't have a preference one way or the other. We're going through charter revision. I just want to know if we have an obligation there or not. I don't have a preference either way. I would just like clarity from the charter on that.
So typically, who would be the one overseeing that? Would that be the Board of Ed then?
well, if it's not us, I would hope so, and they would get regular reporting, I would assume, right?
Correct. I guess nationally, the K through 12 space is a little bit more of the Wild West in that there's a lot of different vendor players. So you have maybe 5 or 6 different record keeping groups, and they're sort of providing the investment vehicles, and then it depends on the governing documents on who sort of governs those.
Who's the fiduciary there?
Yeah,
Amy, do you know who's the fiduciary in those?
Since
No,
they're
I'd
all
have to look at
non-owners,
the plan
so it's tricky.
document.
Alright, well, we'll get clarity from council, as long as it's not us, I don't care, but if it is us, we should make a change, so we'll get clarity from council on that.
That's two
And charter.
mysteries in one day.
2 mysteries in one day, I know.
It may not be stated, I mean, again, you can take a look at it, but it may not be stated.
Like I said, I'm not saying we need oversight, I just wanna make sure we're not supposed to be doing it. If we are, I mean, I just would like clarity there, it came up during charter revision. Alright,
Great.
that's all I have. Tyler, you ready?
Yeah, and I'll just take a few minutes, 19, do you have to, give me a little second?
Do you want the chair?
No, I'm good, I prefer standing. So on page 19, it's this is what we go throughout the year. Obviously, what we included this quarter is our practice and policy focus quarter, which is sort of a high level regulatory update. We do have the investment policy statement in this deck. Give you an idea of litigation trends, but nothing that I think the town has to worry about. And so if you go to the next slide, just sort of what we're seeing, and I know it's sort of a tough slide to see, but I'll summarize a few things. What we're seeing in Washington that may or may not impact the defined contribution plan. So one, first and foremost, the Board of Ed probably has a 403B plan. And collective investment trusts are access to lower cost investment options through an institutional standard that would again supplement the mutual funds. So for instance, in the 401k space, you can get the town has the MFS value fund. You can get an equivalent through a trust that's lower cost. The government is finally letting 403Bs, or hopefully allowing 403Bs to get access to this. So when we talk through the fee discussion, we'll talk through some of the collective investment trusts that may be available to lower costs for town employees to the retirement plan. The other bigger, regulatory change was the Trump administration essentially signed an executive order forcing the DOL and the SEC to evaluate private assets, alternative investment options in a 401k setting. So these are things like private equity, hedge funds, cryptocurrency. Doesn't mean that this defined contribution has to offer private equity. Doesn't mean you have to offer crypto. Just means, and we may start to see in the retirement landscape more of these types of investment vehicles. Again, private equity, higher cost, sometimes liquidity constraints. So it may not be perfect for a defined contribution stance, retirement plan, but where we may see it, and we've had conversations with companies like T. Rowe Price, not your target date funds, but embedded in managed vehicles down the road. So we'll keep an eye on it and update you as things evolve there. But the next slide just talks about litigation reform. I think we talked a little bit about what we're seeing in the industry. More lawsuits around forfeitures. Again, forfeitures when you forfeit dollars, unvested dollars. We're seeing more lawsuits around that, as well as stable value. High cost and stable value are not given where the Fed has kept rates. Stable value investment options not keeping up with the Fed as far as rates go. But the next few slides just go through on 24 through I think it's 28 is the investment policy statement. We don't recommend any changes to the policy statement as it stands now. We like to keep it broad enough to not paint this committee or board into a corner, but specific enough to outline the process. Again, if we ever had to remove a fund, replace a fund, the guidance is all in this document. And then of course, the balances are reflected on the next page there, 29, I think that is. up from call it 18.25 million end of March to pushing 21 million in the 457 plan. Similar story on again, a lot of that capital market performance. Also obviously contributions into the portfolio. On page 30 is the Board of Ed plan, up from almost 2 million to 2.5 million. And then the next slide is the 401A plan, up from 1.8, 1.9 to 2.6. So clearly, capital markets have been beneficial to these retirement plans. And then of course, the following slides, if we go to 33, the target date funds, slightly over bias with US equities with T. Rowe Price. So as sort of Kate went through the international versus US, the higher equity position target date funds like the 2040, 2045, 2050 funds slightly underperform, but as you can see, longer dated performance over the last 10 years, top performing fund over that time period. So the target date funds have done really well. We have them all on maintain. And then the two funds that we have as a status change, one is the Dodge and Cox Income Fund, which is on 35, which one of their portfolio managers, Jim Dignan, is leaving that portfolio for personal reasons. So we have it as note to discuss. No significant concerns there. And then obviously on 36, you'll see some performance longer term concerns. And their lead portfolio manager, Joe Fath, left and is being replaced by a different PM and one that's had more technology experience. They tended to miss time a few of the Mag 7 names, which has had them struggle over the last 10 years. But again, it's on watch for right now. No recommendations to change it. And of course, as Kate mentioned, we have 4 quarters of watch before we place a fund either back on maintain or place it on terminate to replace it. So,
Tyler, if a lot of these our employees manage their own investments, how do their investments compare to the pension investments? Are they at 7.5 on average? Are they do better? Are they more conservative?
Great question. I can look at that. I think given the balance movement, it may be slightly higher, given there's probably, again, it's 2 different pools of assets, right? So you have a lot of investment options in a more aggressive target date fund suite that's typically more than 60% equities and 40% fixed income. So that's going to skew the numbers a bit. We can look at pure performance and kind of give you what that number is.
Yeah, I was just wondering, because that might give us an idea, make sure people are investing in a way that protects their best interest.
Yeah, I'm trying often when we have conversations with the municipalities, there's a lot more assets in the sort of stable vehicles than say 401ks. So right here you can see in the 457 it's 20% of the assets or 18% of the assets. That's a bigger position than what we see in the corporate space. I wish I had a good answer on why, because you'd think someone who had a pension would be the other way, right? Be a little bit more aggressive.
Right.
But that tends to be the case across municipalities. And it's really about, educating the importance of maybe not being too conservative with your portfolio. They're still getting a good crediting rate of that, but not clearly the returns.
Who does our education for employees?
The Mission Square folks.
And how often do they do that? Mission Square? How often do they do that?
Their online site encourages employees to be in contact with them frequently. And then at least twice a year, they, through HR, will come in and set up and offer opportunities. But, the employees can go and meet with we've got a dedicated individual pretty much any time. It's a great, it's great to do. And your point's well taken. I think that generally there's an understanding of the opportunities that certainly have been there for the last few years. So.
Yeah, it's important that we continue to show people, but it's tough for people to actually take action. And
as long as they have the information to make the decision, right?
Yeah.
What pool is this? Do they get to do their own investing?
Well, within a limit, we have 2 new members, so can you just explain the defined contribution, how that's different than a pension?
yeah, so defined contribution, obviously they're either putting their own money in or getting money from the town through the various platforms. and they get to invest it themselves.
Okay, like a
so-
401k?
Just like a
Yes,
401k,
exactly.
exactly like a 401k. So they obviously can be more aggressive, more conservative. It's really up to each individual to maintain that. We put together a vehicle where if they don't make a decision, it's a target date fund based on their age and when they would be retiring. So it's the default if someone does nothing at all is a good one. But
And
again,
that may be something to look at, because that might explain the earlier question is that a higher percentage of staff are defaulting to the retirement target date and missing other opportunities. So that's just a guess.
So it operates just like a 401k, so there really is no additional liability to the town if something happens to that?
Well, as long as we're offering reasonable options for them, and we are.
Okay.
And one of the things Tyler does, I don't know if you do it quarterly, but we go through fees and make sure that we're offering reasonable fees. That's part of our obligation as fiduciaries.
we included in here how they benchmark against other expense ratios. So on that sort of right column there, you can kind of see it. And then we do it as a whole next quarter and how it benchmarks against other like size plans. So you get an idea, okay, how do we compare? That's your risk, right? You're not offering the right types of funds, and maybe the portfolio is too expensive, and we help you mitigate that risk. But again, it's up to each individual to make a decision on their own, how to invest it. And we try to keep a plan menu that is diversified, so people can create a portfolio, but at the same time, it limits their overall risk. So you won't see things like cryptocurrency in there, or Brazilian logging, or whatever it may be. So
Knowing our members is unlikely.
yes. Now I say that now.
But I say that, right. Never say never, but
So again, no recommendations to change. Everything's running smoothly. So.
Are there any other questions? Mike, do you have any questions?
I do not, Madam Chairman. Thank you.
Well, thank you both for coming.
Thanks so much.
Actually, it is very, we find it interesting. I don't know how much the public does, but thank you. And we appreciate all you do.
It'll go viral, I'm sure.
After that comment, I'm sure.
You should go viral.
And please give our best to Chris.
I will. Thanks so much for
Good
thanks.
to meet you. Nice to see you. Thanks.
Okay, we'll now go on to the finance director's report. Amy, if you wanna walk us through that.
Sure.
For members of the public watching, that is on page, what are we at? 265.
Yes.
Right along.
Nothing on 265, on 266. I think Lisa, you had asked about the recreational grant last time. As I was going through the packet, I remember I didn't follow up on that. That is part of the Farmington River Trail, that $248,000 for resurfacing and clearing of some trees and brush. So part of the trail will be taken care of with that grant if we do get it. The one above it, the Krog Lobsit grant for the County Road Hoskins Road intersection. This is to create a roundabout in that intersection.
That'd be nice. I know that intersection well.
We all do.
We all like.
Anyone who needs
Approach
it,
it with
Antonio's, right?
Tap the brakes.
And then going on to 267, just a quick update on where our money market stands. Right now, we have an interest rate of 3.75. So currently under our 6-month and 9-month CDs. So good thing that we invested in those as we continue to say each month. The February adjustment coming, we just found out we will be going down to 3.7%. So from 3.75 down to 3.7. So that will be coming for effective in February. Moving on to the revenues and the expenditures, starting on page 268. You'll see the revenues pretty consistent from this time this year to this time last year, 3,257 compared to 9,224. 9,257 compared to 9,224. I don't have anything, I don't think that hasn't been presented in prior months or at the quarterly, but if you have any questions on that, I'm happy to take them. And And if not, then on page 271, expenditures pretty much more of the same. Current period 53.44% compared to the same time last year at 52.73%. Some of that mainly related to some of the vacancies that have been filled. We had the timing of our pension ARC payment. Again, more of the same of what we went over through the quarterly, but again, if you have any questions on any specific line items, happy to take them.
Amy, I have a broad question. So as far as expenditures are concerned, are they consistent year over year? Is that something that you can expect, or do they have to be watched line item by line item?
Definitely not watch line item by line item. They're pretty consistent year over year. Sometimes the timing of the spending changes. Like sometimes I'll notice that say for certain departments, they'll buy more towards like the spring and the summer. But you typically know when the trend is coming. It's mainly the full-time line items with the transition and staffing that's typically up and down most of the year. And then as we have gotten more efficient and proactive in say our HR department, when we started the human resources department, we've been able to get requests to mill them in faster. The audit has been done faster as we caught up. So those expenditures are hitting sooner.
Okay. How many vacancies do we have right now?
I'm not sure. Do you know?
It's about 12, give or take.
What is typical?
Fewer. Most of those are police chairs. I think we've got, at the last report, the personnel summit was 6. Since then, we've got another departure. So it's 7 in PD alone, which is a little high. The rest of the organization is pretty much on par with what you've seen typically over the years. We've been a little quicker filling positions, again, because HR is getting things in order.
So with the police vacancies, it's obviously higher than we would like, but was that expected? The 5 and 6 and 7, like what was the reason?
We've started to try to look more strategically ahead at retirements. It's hard to know. What we're doing now is we're looking at when an officer becomes newly eligible to retire, and we're able to look at that better. 3 of the departures were unexpected for transfers or departures. For example, the most recent one I was speaking of is a departure for a better opportunity at the national level, at the federal level. We couldn't have predicted that. I think we can do better at predicting retirements though.
Okay.
So we're still, nothing material has changed to change the year-end projections until we get to the next quarter.
Right.
Okay. Amy, one question I had on the Board of Ed agenda, I saw that they put forward a motion to amend their budget. Can you speak to that on special ed transportation in private schools?
Oh, yes. So when we do the budget, during the budget process, our special education students are tuition based, and sometimes they also have transportation included with them, and sometimes they're in the same contract. So when we budget student by student, and then we allocate between tuition and transportation. As we're going through the actuals that are coming in, some of the lines should have been, I can't remember, it was in transportation, it should have been in tuition. So we're reallocating that so that our budget reflects our actuals accurately.
And when it comes to us, you'll show that as an amended budget, is how does that?
Right, so it'll show like when you look at your mid-year transfers, it shows as an amended change, it'll be included in there.
Okay, great. Any other questions for Amy? All right, Amy, thank you. I thought that was a really helpful report.
That's a good one.
We will now go on to supplemental appropriations. That is found on page 272. This is a request for a supplemental appropriation for Aquarian water paving funds. I'll ask Amy to walk us through what that is. This happens every year. I'd like to get to a place where we are actually budgeting this and not doing supplemental appropriations. If we can do that, that would be great. But as I understand it, there's no cost to the taxpayer. Does it reduce the amount of tax dollars that need to be spent on roads would be a question.
Tom Roy would say no.
I might say yes.
But that is more of his lane than mine. I'm not gonna speak on his behalf.
Alright, well, why don't you just tell us what it is and what's being asked of us?
So this is a program that we do joint with Aquarian when they're doing work on some of our roads. Instead of them going out to retain their own vendor for some of the their paving needs when the road needs to be finalized and rebuilt, if you will. The town will take care of those paving services for Aquarian. So we kind of match up our paving program on what we would pave during the year in conjunction with the work that Aquarian's doing. So it's saving them time, and then it's also part of our paving program, and we get a reimbursement from Aquarium to take care of that work.
If we're doing extra work, are we expending any overtime? And does that get charged to those dollars or to the general fund?
If it is overtime related, it would get charged to the general fund. It doesn't get charged to the paving projects.
And does overtime impact retirement calculations in any way?
For some unions, it might, yes, but I would say that the negotiation each year with Aquarian about that appropriation, that number, should account for, it should be to our favor. And so to the extent there's overtime, it would be captured in the number that Aquarian is giving us.
The most recent union negotiation, did you change the overtime calculation for Aspen? No. Okay.
No. I would say Tom Roy does an excellent job of negotiating with Aquarian on this. And more communities are doing it, as you know.
I meant just for our union contract.
We didn't make any changes.
Okay. All right. Any other questions?
So that comes back to us from Aquarian, is they including the overtime and everything, it's just only a question of what we send it out through, but it eventually comes back to it comes back to the town?
Correct. Well, they're paying the town.
Okay.
In advance.
Hence the appropriation.
Yeah.
And to the chair's question about, can we know earlier? That is a bit of a challenge because we're dependent on Aquarian to give us their plan and for us to intercede it with our plan. And so it does, I don't know what we're doing next year with respect to Aquarian.
Yeah.
But we will do what we can to get that budgeted so we don't have to ask for a supplemental.
I mean, it's fine. It's just significant. It's almost 10% of their budget. That could be important to you at some point.
Is there a reason why there's that mismatch? Is there a timing? Do they go by, like for instance, they go by calendar year, we go by fiscal year? Is that what causes?
I don't think it's so much a timing issue as their plan for which roads they're repaving as they replace water lines is not necessarily, far enough in advance for us, right? I mean, we would love to have more notice as well. Obviously, the most important thing to our team is to not repave a road that they're then going to dig up, which was a huge, I remember in my last environment in Poughkeepsie, Central Hudson was doing a gas line replacement, digging up streets that the city had just spent, $750,000 repaving. And it's very difficult to go back and fix those types of mistakes. So Tom is doing a good job of coordinating with Aquarian to make sure primarily that we don't make any mistakes that cost us money. And then secondarily to make sure that if it's economically feasible for us, we'll do the work for them and they'll give us the money.
So they give us the money first and then we do the work, or we do
It's
the work?
my understanding that we come to you for the appropriation before we spend it, which is, I think, the policy, that we're endeavoring to. No digging till
Good
you've
job.
approved it, sure, that's right.
All right. Any other questions?
A lot of this is beginning to make sense to me as to what's happening in town and how that ties into this.
I mean, sometimes pipes break. That happened on my street and they had to repave the street.
Yeah.
Generally, they'll use their contractors for that.
Right.
Because it's on an emergency basis and so it's charged, they pay a lot more than when it's planned, obviously, but
this wasn't on the budget years ago, as you'll recall, Chair.
I do recall.
You and I had many a discussion about that because it used to be some money that could help us when it came in to pave more. So now it's appropriated as it should be.
Okay.
And used for roads, which is, I mean, it's, I think, the right way to do it for transparency purposes. All right. Well, with that, may I have a motion effective February 17, 2026 to approve a supplemental appropriation for the town's pavement management program in the amount of $196,000.
So moved.
Second.
Amy, just clarifying that will go to the capital highway pavement management. Okay. All those in favor, please say aye.
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 That carries unanimously. We'll now move on to mid-year transfers. Amy, it's updated online as well, sent an updated mid-year transfer request that really shows exactly which line items the transfers are going to, not just department, but within the department, which line items they're going to, which I thought was very helpful. Amy, when you do your accounting thing, each of those line items has an account number associated with it, does not?
Correct.
We just don't show it because in our budget, it ties with the budget that we approved in May last year. Town manager full-time line item would have its own accounting number, I assume in
Correct.
Munis, right? But we just don't show it. But if anyone wants to see that, I know you had mentioned, Lily, that we wanted to see that, we do have the ability to see which account numbers they are.
That would be great.
Okay, Amy, why don't you tell us what we're doing and why we're doing it?
And thank you for sending us that supplemental information.
Sure.
It was very helpful.
Hold on, let me just share it for Mike so that he can see it.
Yeah, that's a good idea.
I'm not trying to leave him out. Okay.
Appreciate you, Amy. Thank you.
Okay, so during the budget process, as we will be getting into, we have a line item that we have contingency. So in our contingency line item, we budget for unsettled union contracts, if there's any sort of items that we don't know if they're gonna be paid out, like we talked about the comp time payouts. Those things will happen during the year. And then we wanna make sure when we're looking at the budget after these things have already settled and happened. So just for example, town manager, if it's a CSCA contract and the contract settles, we're charging all of the employees in the town manager's office their actual rates. We will not charge the contingency piece to the contingency line. Everything will be charged to either the full-time or the part-time line as appropriate. But we wanna move out the budget line item to match those line items so that we can see what we actually budgeted for in contingency for each individual department and then match it to what's actually happening. So that's what we're doing here. So
Amy,
if
did that come out exactly as you planned, or was there higher?
it never does.
Did it come out primarily as you had planned?
He negotiated.
We're not asking for any additional funds, but it's a very good question. I remember a year, or it might have been two ago, Chair, where we needed to come to your board to essentially, I say encumber, but you say assign money for our IBPO on the police contract. What happened in that case was midway through negotiations, our finance team was telling us that this is likely to cost us significantly more than is in contingency. And as soon as we knew that, we sent the message to the boards. This board assigned the money if we needed it. We ended up needing a little less than what we had projected. So sometimes contingency doesn't give you everything you need and you've got to ask for a supplemental. And in that case, I think we used reserves to do it.
I think we used general fund at that point.
Did we?
Yeah.
Okay, great. Even better. So that's good. Yeah.
So in the updated document, you can see here that the allocation from the contingency will actually start at the bottom.
Well, if I could share one more thing on this. So when you're guessing the contingency, if you're in negotiations or you haven't entered negotiations yet, it's much harder to get that number right. But now we're up to date with all of our collective bargaining units. And we other than MOUs and individual things, we won't be back at the negotiating table with them for a while. So you should see our estimates being much closer because we know what contractually required to do.
So at this point, we shouldn't see any contingency because we're done with union
I
negotiations.
think there's some, here and there, Chair, just, so you never know, step increases, new hires, things like that.
And then the unaffiliated every year too.
The unaffiliated also is not a union negotiation, so.
And so which ones are typical, what's the timeline for these negotiations?
So most of our contracts, some are 3 years, some are 4 years. So, typically you wouldn't do a 2-year. I think when I first got here, we did a 1-year extension with the 3 CSEA groups so that I could get a handle on the finances before we did a 3 or a 4-year deal. So we did that once, but usually it's 3 or 4 years.
Okay.
Maybe for unaffiliated, you guys could reach that during the budget and we could just budget it.
Yeah.
That would be something to strive for, so that's not a contingency.
What I've been doing lately, just, full disclosure, is I kind of look at what our colleagues at the Board of Ed are doing and what the COLA numbers are and what the Board of Finance guidance is, and then we look at what we might do on the unaffiliated side. So, but yeah, it shouldn't be a lot in contingency moving forward.
So interesting.
So starting at the bottom over here, you'll see the contingency reserve. So we had budgeted $264,000 during
What
the,
page are you on?
This is the
This is the
thing,
new-
the new thing that she said.
No, I know, page 3 of that, okay.
yes. So we budgeted $264,493 under the contingency reserve line item. So now we are gonna clear out that line item because nothing will be charged there. And we are gonna move it to each line in which it was budgeted. So just starting at the top, just as examples, so the town manager, full-time line for the contingency, we're taking out $11,207, human resources $6,400, and so on. So for each of the full-time and the part-time line items, to then equal that contingency line item. And then when you get your budget to actual report, you'll be able to see for each of these line items, we budgeted the actual full-time line item plus $6,500, and then you'll be able to see the projections in the third quarter coming up and if they are in line with budget to actual.
Nice.
That is the contingency section of the mid-year transfers. And then if we go down to additional department requests, these are either areas where we're either projecting that we are gonna come in a deficit or we just need to move things around, in the case of the insurance, or where we're seeing additional needs in the town during the year where we think we can utilize some of those savings instead of putting them into fund balance. So the first one you see there is a request for my department. We have a staff member that is currently out on FMLA, and we have another staff member that is going out on FMLA. So we've been pretty steady in what we've been able to kind of keep on top of things, and then we had our W-2s that we had to do, we had our 1095s that we had to do. We're trying to implement the fraud risk assessment, we're trying to stay up on top of journal entries, and we're really trying not to get any further behind given another member is going out and we're gonna have year-end close, et cetera. So we would really like to ask for some dollars to hire some additional staffing part-time just to kind of fill that gap on some of those bank recs and journal entries so that we can focus on some of the bigger items and kind of stay on task. So that's the first one. The second one is just a budgeting correction error. Actually, just to go back up to, I can use this one as an example. So just for the our liability insurance, when we had our Latimer Lane construction project, that project holds its own insurance. Now that the project is completed, the Latimer Lane building goes back onto our master policy. So we short budgeted that during the year by $15,000, not anticipating the project closeout. Or it was an oversight, I'm honestly not sure. So we just wanna make sure we make that budget correction during the year so that our budget to actuals are not overspent. So that's about $15,000. So that insurance line item, you'll see increasing $15,000, and then we have savings in our health insurance line item. So we're just basically requesting utilizing some of that savings in that line item and reallocating it to our insurance line item. The next two are for the highway department. They have had a lot of small storms, a couple big major storms during the year. their overtime is already going to exceed budgetary actuals. So right before it does, we would like to do a reallocation. You can see here that the overtime, we're allocating $85,000 for now. We might have to come back for more depending on how the rest of the winter goes. But for right now, we have $85,000 to try to cover through the end of the year with the planned work and any additional snow that may be coming. We have significant savings, if you recall, from our police full-time line item due to the vacancies. So we're requesting that we utilize the savings from the police full-time line item and transfer over to the highway overtime.
Amy, did Public Works have any savings in their budget that they could accommodate some of this from?
I don't think so. They actually, there is like some staffing transitions, but I think they also have additional staff going out that they're gonna be supplementing that staff with other staff. So right now, no, they would likely be over budget.
And that's okay to do, to be able to transfer from something like police into, is that
Only
allowed?
upon the recommendation of the Board of Selectmen and the Board of Finance, because, and the reason why that is, that's a great question, is because it's like what we're hearing at the national level. Congress said allocate this money to one way, and the president has said, no, I'm gonna spend it on border support. He didn't go through the process that we do it, that's why we had public audience. I assume the police department knows this is happening and the police commission, and they're okay with that.
They are, Chair. In fact, you'll see in my budget presentation tomorrow for next year's operating some changes that harvest some of the savings on police vacancy, which essentially is what you're seeing here. I think, I agree with Amy, it's the best place to pull it from as a mid-year transfer. Doesn't have any negative impact at all. You certainly wouldn't wanna, go get a supplemental when you know you're gonna be underspending this particular line. So the whole mid-year transfer process is a really good one because it allows us to right-size the budget halfway through and make sure that this board knows what we're doing and fully authorizes those transfers.
That's exactly why we do it publicly, why we do public audience, why it requires both the town manager, the Board of Selectmen, and this board to approve it. For precisely that reason, so that is why we do
But
it.
is that why we have VIPs in the audience?
I will say, if it was a transfer just within a department, that would just require the Board of Selectmen approval, it doesn't need to come to us. But
Sure.
once we change the purpose that the voters voted on, we make sure we do that publicly so that the public has an opportunity to comment on it. Okay, are there any other questions? Amy, when we do the minutes on this, could you please attach these charts to the motion so that
Sure.
anyone who's interested doesn't have to flip back to the agenda? All right. I have a motion, I'm sorry, any other questions?
No.
Okay. May I have a motion effective February 17, 2026 to approve the transfer request between departments as presented and attached to this motion?
So moved.
Second.
All those in favor, please say aye.
Aye.
That motion
Aye.
that motion carries unanimously. Thanks, Mike. Okay, we will now move on to the annual report. We have a draft before us. We have a few more things to add to it as we move forward. I wanna thank Lalitha and Mike for really working with Franklin and getting this to where it is. As is our practice, it needs page numbers.
The actual document has page numbers
I'm sure.
when it was put in here, and also the font is different, so I just want you to know that it's going to be I think the way it's saved as a PDF, it's saved differently.
So we'll we'll maybe work with Brett to get it saved in a way that's more readable. Brett is a master at that, so he can help with that.
Oh, good to know.
He is. He has saved me many times. Page 284, which is our letter, there is a placeholder for other capital listed on page X that needs to be filled out, and then those capital projects need to be added. just to confirm, I just wanna confirm publicly, Amy, when we approved this letter, we asked, subject to your approval for accuracy, just confirm that you've done that, okay? KPIs, especially on the KPIs, they're from the tri-board, but if anything changed in between.
Okay.
We need to add the glossary, there's a placeholder for that, missing capital. State law actually requires us to report on part 2A of chapter 240, which is TAR, what was spent there, so we do need to add a section on that. And I want to publicly commend the following appointed boards who really sent in excellent summaries of their work this year, and just so appreciative of the hours and hours of work they do. Specifically Aging and Disability, Economic Development Committee, Fair Rent, Sustainability, Youth Services Bureau, and Charter Revision.
Yes.
Sent in contributions, and it really helps the public sort of understand what people are spending their time on for our community, and these are the things that make our community better, and just really wanna congratulate them. I did note that there were some performance indicators included in the department things, and I think that's a good start, and we'll build on those over time to get them to where they need to be. So thank you to department heads who put in, and their list of accomplishments is also commendable, and wanna acknowledge that as well. And I think this is a good start. I
It's a
think
good
over the
start.
next 2 years, we will tighten this up and get it to the level that I think we all can be proud of.
Yes, agreed.
Is there anything else anyone wants to add? Okay, also, there was a request that we change the front picture. The flower bridge is the most beautiful thing, and that is not the most beautiful picture. So if we can find a beautiful picture of the flower bridge, that would be great.
I have one in my living room that was painted by a local artist.
Oh, by
Maybe I'll
Catherine Elliott?
snap a picture of that one for,
That
well,
would be-
we probably
I
can't.
just was looking at it thinking it was a beautiful picture.
If you're looking
Yeah, I
in
mean-
setting trusses, I think it is, really.
That's right, from an
If you're looking
engineering
at what?
perspective.
It looked like
As an engineer,
I appreciate it, however,
there weren't
Not
any
as many
flowers.
flowers.
No, and more than that, it's you know, the bridge itself, the entire bridge is so beautiful, and it speaks so much about where, you know, all that this town has done over 300 years. We should really give it its full adoration.
It's glory.
Yeah.
It's okay to dress up to go to prom, I guess is
Yeah.
what we're saying. This is the paperwork equivalent of prom.
Dave, do I just tell Franklin on just a description of the Board of Selectmen? Cause we don't supervise all the boards and commissions, so just was gonna, I'm
Well,
gonna
you do
send him.
appoint them.
Huh?
You
Yeah,
do
but we don't
appoint them.
supervise them, so I would just, I might change the wording on that.
We'll take care
I
of
just
it.
saw it, so I was like,
Thank you.
No problem, Chair.
Okay.
So just so you know that Mike Doyle and I have been appointed by Madam Chair to take care of the annual report, so
We appreciate your work, and Mike, thank you very much. Franklin says thank you both.
yes. And thank you to Franklin, and if we can get that done this week, that'd be awesome. And then we can move on to the next challenge.
Okay, great. We'll move on to the minutes. Mark, at our last meeting, you had offered to provide us a summary of sort of the settlements you've reached on assessments since the last revaluation. We're trying to understand sort of where the grand list was and what we've settled.
Yeah, I
Some of
think
the big ones.
our attorney just resolved or had a trial on one of those last tax appeals, so if I can have a little more time on that, we've been kind of working on the budget, but I'll get that to you, Chair.
Can you get it to us before your presentation? Just,
Tomorrow? No.
no, not that, you're not presenting to us tomorrow,
Oh,
to
no,
us.
April,
I'm focused on my
March
Yeah, no.
Absolutely.
March 10th.
Okay.
It's only days, no problem.
All right.
Thank you for the extra time. Yeah, I was
Get
like,
it.
tomorrow, no, I can't. Jeez.
Panic.
Mark,
Yeah.
Where's that?
So that's on page 345 in the minutes where it says former member Art House. He's actually Dr. House.
I didn't know that.
Yes, and he's a very
Dr. House.
Dr.
My
House.
mother's favorite show, you know.
We're on 345, Lolita.
That's right. This is on 345. The third paragraph from the bottom that starts with Miss Hevner. Martin Luther King. and-
345, it's not there. Oh, we have new things because of,
So
Oh, okay, I'll find it.
so it's on page 1 of the minutes.
Got it.
And then it's that one paragraph that talks about the MLK Junior event. And it's an art house is actually Dr. House. So
I forgot to mention, I had a wonderful tour of Two Farms Village. It's mentioned here. That is I sent you some pictures. I don't know if it went through because my phone was doing weird things, but it was a fantastic tour. It really is in great shape. The first selectman was able to join me there. The superintendent of schools was there, Tom Roy, and a few staff. So congratulations. We expect to move in, I think, next week or this week.
that'd be
That's right.
awesome.
So really,
I want to go. Once it's up and running. I don't know why I missed the previous one because you've been mentioning it over and over again, but
not to worry. But it was, I mean, it's the kind of thing you look at and think, okay, this was a good thing for our
Yeah.
community. So congratulations to everyone who worked on that. Mark, thank you for bringing that
Thank you,
to
Chair.
close. All right, we'll now move on to communications. And this one, although we usually don't spend time in it, I do want you to walk us through what this is, Amy, because there are some significant changes and you can talk to us about what they mean and how that impacts our residents.
Page 349.
Yes.
Sure. So these are our grand list projections over time. So you'll see where we started, where we had projected fiscal year 26. And then right at the beginning of, the end of last budget season, we had a projection going into April when we were approving our prior budget. And then the assessor refined her projections again in December, and then again about mid-January, and then her final assessment, that last column, happened on January 30th. So just to take you through each line item, if you will, and below is basically just a description of what changed in her projections and how we got to our finals. So her projections back in April of 2025 were slightly higher than where they landed at the end of January in 2026. So the main change here, although it was off, it really wasn't off terribly far, especially compared to where she estimated in December to January. But the main reason for the decrease in assessment is a apartment complex that was put on hold. So initially in April, she thought that this project would be farther along, and then as time went on, that project was put on hold and therefore not included in the final numbers. We also had some smaller things. We had some settled tax appeals, and then we had some better exemptions that increased
Do you mean the
from the prior
settled tax
years.
appeals, is that the net revenue to the town or the assessed value?
That's the assessed value,
So the revenue from those is a small loss.
right?
Okay.
And then down next to the personal property, those projections pretty consistent from April all the way down to our final in January. What happened were consistent until December, and then in January you can see that there was a larger uptick as of the end of January. Initially included in the assessor's estimates was not the 25% penalty for the late and the non-filers. This penalty was under projected. There was one major penalty that increased her assessment by almost $3 million.
What was that for?
I don't have the company name, but they just didn't file. So they were assessed and they were put on notice for it. So they are well aware. And then the motor vehicle grand list, this is probably one that was a surprise to all assessors across the state. Not only did the number of motor vehicles increase across the state, but the average assessment related to those motor vehicles increased as well. The number of vehicles increased 1%, and then the value of those assessments increased 3.5%.
Is that a result of the new assessment criteria?
Part of it probably is, but since that started last year, I think some of it was built in. I think like more of like the newer motor vehicles and the increased vehicles, they're buying newer vehicles and therefore tax at a higher and less depreciation in the schedule.
One thing I do wanna point out, I've been on this board for a long time, and there was a time when we would see variations from initial projections to final in the 2 to 3% that our assessor went from 134 to 0.9 on her projections is remarkable given the past history, so I think she's done a great job there and do wanna acknowledge that. We're regularly seeing 2 to 3% variances, so over time, this has really gotten much better, so I know Mark would like it precise, and we may get there at
Just
some point.
want a higher number overall.
I know, right?
It's a little
Right.
higher.
We're getting there.
But it is very hard to do, as you know, you think a project's coming and then it gets delayed and that changes your assessment. Okay. Amy, 350.
So the remainder of the reports are just Francine's reports that she prepares for submission to the state, or reports that she does for herself. For example, the grand list historical changes, the exemptions and abatements, and then the top 10 taxpayers. I haven't really gone through them, but if you have any questions, I'm happy to get more detail on them from Francine.
I did have one question. If you can go to 352 and talk about the exemptions.
Yes. To
Oh, so the veterans exemption that we're seeing that large increase.
By 3 million, so that's not insignificant.
So that is something where I forget how it came about. I can confirm with Francine, but I know there was something where many more veterans had applied for the exemption in the current year. I don't know if it was an outreach by veterans associations or basically the word got around. And she had a lot more veterans come in and apply for the exemption to the tune of about $3 million. There is something that we can change on our level to limit that. But as of right now, where it stands, we are an increase of about $3 million on that.
And just with these changes, 12 million equates to how much new revenue? You can use our current mill rate.
12 million on assessment. I don't know offhand.
so that's
The assessed value, not the market value?
Right.
the mill rate is 338, right? So I have 4 million. I can't be doing it right. Oh wait, you mean on the difference or on the?
No, just
on the-
12 million is how much in lost revenue. That's money we've given away.
Yeah,
Not necessarily for a bad purpose, but it's money that's not available.
so
It would just be times 30.
time the 338, right? 0.338.
whatever our mill rate is divided by 1,000.
Twelve 595 328.
About 396,000.
I've got 425. But I may, what's your mill rate, Amy?
I just used the town portion, not the town and the fire district, so it's 33.02.
That's about $400,000 when you think about what you could do with 400,000 in your budget. Something to just think about there. Wendy, could you just speak, I see the horse exemption passed having failed just a year before, can you speak to that?
Well, the board voted 5-1 to pass the exemption. We had members of horse ownership come to our meeting to speak at the public hearing. A lot of it has to do with the difficulty in assessing, that the assessor is spending a quite amount of time out at the facilities trying to assess the accurate value of the horse, and the argument that was made is the time spent, tell me if I'm wrong, Amy or Mark, a lot of the time spent trying to get an accurate assessment in hours and resources is much more than the $15,000 to $20,000 that we're gonna get in income. I think, is that sort of?
Sort of.
Sort of, that's the best I can come up with. So that's pretty much.
Okay, and then on page 353, it says 2025, the grand list historical changes, it lists at 1.6% increase. Can you talk to that? What is that?
So that's the difference when so when you're looking at that first page. If you go to 350, you can see it a little bit clearer. But you're on 349 and you can see that the fiscal year 25-26 projected is what we built into our budget. So during the fiscal year, people come in, certificates of corrections are done, appeals are settled, things of that nature. So then your actual fiscal year 26 grand list, which shows here as 2024 on page 350, that is actually what happened by the end of the year. So then it decreases, so then your actual for 2020, or your projected for, your actual for 2025 compared to that is showing an increase of 1.65.
So Mark, this may be your answer. 18 million in settlements, it looks like in 2024, decrease in the grand list
In assessed value,
in assessed value.
roughly.
Which is quite a bit more in actual value.
Yeah, I think there were, and what I really want to get to is that 3 or 4 represented maybe as much as 70% of that, and we want to really kind of understand that, because I don't think it's equally blended among all of the appellants. You've got a few, and I think it can be informative too, because we've got, as you know, a reval coming in 2 years, and we've got to do a better job of understanding what the effect of the tax appeals on that reval will be. I think
Yeah, we had anticipated about 5 million.
Right.
And it's
It's
18.
way off.
Yeah.
It's a weak link, I think, Chair, that we're gonna be looking at.
Generally, Board of Assessment Appeals won't rule on very high value items.
Over a million, that would be Board of Selectmen, right?
Well, generally still ex-member of Board of Assessment Appeals, so it
Goes-
would often still come to us because they still have a right to appeal. But in general, the board, as long as I've been a member of it, had a policy of not ruling on it. And so if there were settlements on that, I assume it was settled through some sort of legal action.
Right.
Through Superior Court, and you're right, I think that since you brought it up, my recommendation has been that the Board of Selectmen consider giving the Board of Assessment Appeals new guidance on whether or not that million should be. You're referring to an option that the Board of Assessment Appeals has to not entertain those. And in fact, the argument goes that maybe it would be better if the Board of Assessment Appeals did undertake that and maybe even had some support in doing so. Because if you can't do if you're not able to do a good job of estimating what they're gonna be in Superior Court, you're punting all of those high values when you could conceivably get a better result if you don't, not my word, but if you don't force appellants to go to Superior Court. And that has been presented to us by one member of the Board of Selectmen, and we're looking at that. So
The Board of Assessment Appeals is gonna need significantly more support in
Yeah.
obscure commercial valuations.
Yeah.
Equipment being one.
Right.
Specialty buildings like hotels was another one we would spend quite a bit of time
Right.
preparing for. So
But
that's
you're-
the direction folks wanna go, that group's gonna need some real data, because it's gonna be beyond what the training around personal property and motor vehicle
Clear.
and
But we are spending a significant amount on consultants now and on legal fees as well. So there is an analysis worth doing, I think, once we get beyond this budget cycle. I mean, certainly well before the next reval, we have time to look at that, and I'd love to get your feedback on potential paths forward. Thank you.
Right, and then on the next page, it just shows some of the highest payers of personal property, real estate. and motor vehicle. Again, with real estate, we'll see how many of them are apartments. You'll notice that, although not all. We do have Simsbury Commons is not an apartment, right? Is anything else not an apartment there?
Who's SL Simsbury LLC?
Which one?
This one? The first one?
SL Simsbury? What is that?
Sorry, Chair, I missed that question.
Your top taxpayer, SL Simsbury LLC?
It's probably the solar farm. No, I don't know. I'll have to check on that, Chair.
Antonio.
I think maybe McLean, Chair, but we'll get back.
Housing/commercial development.
Oh, I don't know.
Alright, so we'll find out who that is.
Yeah.
Maybe at some point. Okay,
There's a
so
legal case that we have with them apparently.
Yeah,
Oh, it's Silverman. It's
It's Silverman. I knew I
that's
read it.
Silverman, okay. That makes sense.
Google helped me with that one.
I just
So-
did too.
AI.
Is there anything here that's not housing? Executive risk indemnity, maybe, if that's not housing, right?
No.
Okay, so that's a lot. Personal property, thank you, CLMP and Aquarian. All right. And then on the last page, combined, when you put them all together, the top 10 taxpayers, you can see they're still, again, mostly apartments, but CLMP makes the list and so does Aquarian. Okay. We forgot to, did we take a motion on the minutes?
No.
No,
Okay.
we didn't do
May I
that.
have a motion to approve the minutes as presented?
So moved.
Seconded.
All those in favor, please say aye.
Aye.
Okay, that
Yeah.
passes.
With that small adjustment.
With the small adjustment of
Dr. Hurst.
yes. Then we also we got an update from Tom Roy on Simsbury Performing Arts Center bandshell expansion.
Sorry, which was great.
Thank you.
Love the summary. It answers the how much contingency
It
do we
did.
have back? It doesn't lose $100,000. It's clear. I love it. Tom Roy, I thank you very, very much.
And we thank Art Wallace too for making sure we understood all of the, thank you very much, Chair.
Yes, Art couldn't be here, but he did have a conversation with Tom about what the board was looking for, so.
And Chair, Mr. Roy did say he'd be here for your March meeting. It's on our calendars.
Okay, great. All right, so please extend our thanks to Tom for that.
Will do.
Okay, with that, I think what we'll do is move to go into executive session. Executive section to include Brett Marchand. Amy, are you staying for that? Amy Merriweather and Mark, are you staying?
Yes, I will,
Okay.
Chair.
See you guys.
And the town manager, Mark Nelson, pursuant to
For over 40 years, SCM has been the voice of our town,
bringing us together through local programming,
education, and live broadcasts.
SEM isn't just about television.
It's about empowering our community, ensuring our voices are heard during government meetings, and celebrating milestones.
like our high school graduations.
But today, SEM faces a challenge.
Our funding structure is based on television subscriptions. And it's no secret, people have been cutting the cord.
With a shift to internet-only subscriptions,
SCM receives less revenue.
Even though all our programming is freely available online.
We need your support.
We need your support.
We need your support. We need your support.
we need your support.
Your donation can make a difference. It will ensure that SCM remains open.
Continues to educate our youth and keeps our community informed.
Thanks to SCM, I've been honing my creative skills, helping me work towards my college degree.
SCM is crucial for keeping our community connected.
SCM isn't just here to broadcast local events. They're actually preserving Simsbury's history.
Join us in preserving Simsbury's voice. Simsbury's voice.
Together we can ensure that SCM continues to thrive
for generations to come.
Visit our website
Or scan the QR code on your screen to make your donation.
Every contribution counts.
Thank you for supporting Simsbury Community Media.
Where your town,
Your schools
and your government come together.